Good morning. Welcome back to Forex Focus. I'm Glenn Freibarger. With me, Pete Mulmat. How we doing, Pete? Happy Wednesday.
Happy Wednesday, my friend. How are you doing?
Not too bad. We had Monday off, so feels kind of like a Tuesday.
So what does a hip, cool
I'm not
rocking
doing
guy do on a Monday?
It's way too cold. It's way too cold. You know what I did do,
So you
actually?
bunkered?
I did. And I
Really?
watched all four parts of the Saturday Night Live documentary. I, of course, watched the like special or whatever. So they haven't.
Was the documentary better than the special? Because the special, everybody's got different. I thought the special was
I thought it was pretty funny.
okay.
But did you watched the majority of it? Our friend Frank thought it was bad and just watched the first one and turned it off. So
I watched the majority, but I had recorded it because the amount
Yeah.
of commercials on there were
unbelievable.
absolutely brutal.
Yeah. But yeah, the documentary was good.
That's what I wanted to see more of. Was actually more of the old clips.
Yeah.
And more of the story behind it all, and it didn't
Yeah.
seem like.
The
So that
whole-
was what the documentary
Yeah.
was.
The whole second episode was about the more cowbell sketch,
Okay.
which was pretty funny. That they drew it out for a whole like hour. But it was pretty funny. And then the third one was like a week in the life of the writers. Seems like a cool job.
Yeah.
Seems like a horrible job. They have like 80-hour work weeks, so it challenged me to work harder, so that's good. Like Tuesday, like they have their big day on Wednesday, much like I have my big day here on Wednesday, and so on Tuesday night they stay up all night writing sketches. So, I was.
And then they got to pitch them, right? That's
yeah.
the whole thing. And then
Yeah, and then even if they get their sketch picked, then they become like the director of it for the
Right.
rest of the week. But then all the way up until dress rehearsal, they can air it for dress rehearsal
Right.
Saturday night and then still cut it.
Yeah.
And that just seems, gut wrenching.
it's
And then you get one day off.
Right.
And then
It's
like, oh,
interesting
geez.
competition.
So yeah, I was up all night working hard.
That was
for
that
you.
Paramount Plus.
Sorry. Peacock.
Oh, Peacock.
But they actually, it turns out I was paying for Peacock. Didn't really know that.
I am so I am not going to subscribe to any more of these stupid
Yeah.
things. Paramount Plus is the Kevin Costner thing,
Yellowstone.
the Yellowstone,
Yeah,
and all that stuff. So
But yeah, Peacock actually has it for they have like an SNL hub now,
Right.
and you can play episodes by.
but you
like,
have to be a
decade.
subscriber into it.
Yeah, but then you can do like the 80s, the 70s, whatever. So yeah, there's some good stuff. So yeah, maybe one day I'll be on Saturday Night Live.
You could do it.
Hosting would be pretty fun, because that already means you made it in some fashion. So
Again, you're a young technology crypto billionaire. You could be on.
I'm not a Doge kid.
You could be
So
Mark Zuckerberg with far better hair in a couple of years. So
I'm just one perm away from getting hair as good as his.
oh, there you go.
Yeah. So yeah, other than that, it's too cold to do anything. All right.
Yeah.
Except work.
Except work. Listen to you. Except work. Wow.
So it's good to have a purpose. Thank you for giving me
You
that
sound like
purpose.
the angry little man who complains about being overworked.
No complaining
Okay.
here. I relish at the opportunity.
There you go. See, you're a diplomat and a tactician. I like that. Very good. Very good. You want to take a look at these markets?
Yeah, let's hop right in to the platform we got here. We've got the U.S. dollar, a big resurgence this morning.
Yep.
What calls out to me immediately is we're seeing dollar strength against some more exotic pairs that aren't some of the majors, but we did see here looking against the British pound, we're seeing quite the fall off from some highs, and I think we got some inflation measures this morning from the UK, hotter than expected, yet U.S. dollar taking charge. What have we read into that?
It seems to be Euro kind of, unraveled a little bit yesterday afternoon. Aussie did too, Canada. And it just continues to unravel a little bit. So, we've had a pretty good bounce. We knew that the bounce, whether you think the next stop in cable is 130 or Euro is 107, it's not going to go there in a straight shot. So, for me, either story works. If you want to be the short-term contrarian, 126 was an interesting level here. 105 was an interesting level to sell euros. Now they're getting back to interesting levels where if you want to, okay, we had a little bit of pullback from the run-up, and I want to get long. it's giving you, and what it does too within this framework now, I've got a pretty good set of guide rails of where I want to get in and what to expect from it. And we know we're expecting less than we would have gotten two weeks ago in terms of movement. But you could kind of set up, where I'm wrong if it crosses here and what I'm looking to expect. And I think that works for almost all the pairs here. So depending on your bias, this is one where if you're a dollar bull, I wouldn't be looking to sell, 60 pip break with the idea it continues to go. Can it? Absolutely. But if we do see any intraday bounce during the day and you want to resume that you think that dollar strength is going to resume, because, again, the president was talking tariffs again, talking 25%. I don't know what he's saying. And sometimes it seems like he doesn't. But I think it's going to be interesting. Number one, that really doesn't impact the markets like it used to. And two, we're back to looking at rates, rate differences. U.S. rates, yields are a little bit higher today. Bonds are a little bit lower. U.S. equities at all-time highs.
Oh, yeah.
Gold holding on to almost all-time highs. So traditionally, the correlation to those would lead you to see a little bit stronger dollar. Is that why sterling's lower, euro's slower? No, but I think it's an interesting piece. What will be interesting for me is this pullback we see today. And let's just jump over to the euro really quick. Excuse me. Excuse me, everybody. Bigger pullback here.
Yep.
We get back to 104, really even down here. If we start to stage a rally, irrespective of whether or not Spruce put a new lifetime high in on the opener or not, or they fall off, that speaks to a little bit, there's a little bit more euro strength out there than we imagine. And we're not the only rocket scientists thinking about, hey, that was a 100 pip pullback. I might want to lean into this a little bit.
Right.
So detaching from those things that traditionally drive are good because it means the market has a little bit of energy. So I think in the setup here is, again, anything between 104 and a quarter and 104 even is an interesting area. Anything below 103 and a half, you're probably between 70 and a half, you're wrong. So you're risking 50 points. What are you looking for on the upside? I think 50 points is a reasonable upside. If you're looking for all 100, you've got a little bit nothing wrong with that. You just got a little bit longer term trade horizon. I don't think you're going to get that in a day like today, but we'll see. Shorter week.
Yeah, but it's interesting because we are looking at these hourly candles, and it's like, man, I don't really remember, this much action. But yeah, if you weren't tapped in, this high right here is just from Friday.
Right.
And so you've had all this action from Sunday, Monday because Forex markets weren't closed. But if you go to the daily, you can kind of paint a picture of greater momentum there coming off of really rejecting that 105,
right.
And now well back within the range that we've been seeing from the beginning of the year. Since really this is that December Fed meeting, which really kind of recentered some of these trading ranges.
No, and from you can draw a bunch of lines on this if that works for you, whatever. But what this really says is, okay, right now the market's bound a little bit. We know vol's in a little bit. Daily ranges are shrinking a little bit. Set those expectations around your trades for both winners and losers. 104 is an interesting value area. Can this bleed down to 103 and a half, 103 even? Sure. Do you want to wait if you're a little bullish? No, I think you got a decent setup here. But it'll be interesting to see. And as Forex traders, what we love is the ability to have time to manage a position. So this market, the back and forth that we've seen all the way running through Jan and February, these highs, these lows, they've been nice moves. 250 points to the upside, 250 points to the downside. But even on an intraday basis, we've got time to manage something. If we put it on and we can get a little bit something out of it, you're getting some time to manage that, which when we had that November dollar strength, it was all just one way. And it was just,
Yep, there you
were
go.
just, you barely got a reprieve of any kind if you wanted to play the contrarian. So here you're getting a little bit of that. And, so when we look at that 104.25 level, we say, well, it's only 75, 80 points off the highs. Sure, but it's at a level that we would have looked at last year and say, well, we were thinking 108 was cheap, 107 was cheap, 106 was cheap, just till it wasn't. So you've got to kind of put a little bit of context. And that's why I don't like to stick to just one time frame. I like to, looking at shorter time frames, if you're an intraday scalper, sure, that's where you look. But going back to that daily chart, again, gives you a little bit of context. So it's a good way to kind of ground yourself into, okay, where have we been over the last period of time? And that, if that helps you make decisions, that's great. So you've put together some slides. Let's take a look at them, my friend.
I do have some slides. You brought up a good point about looking across asset classes earlier. We had... we might get all-time highs in equities,
right?
And gold all-time highs. That's been the story. And for people that aren't Forex traders, I thought it would be interesting just taking a deep dive into how to track the U.S. dollar, because much like equities, you're looking for one number to kind of gauge the health, the strength. Metals as well, bonds. You look at the 10-year. Usually for a lot of movement. And so there's some interesting history in tracking the U.S. dollar. So if we want to get into it, I put together what commonly people look at outside the Forex market. Good. DXY is an index that measures the U.S. dollar strength. It has a weighted basket of currencies, and the history behind that was from the creation of the Federal Reserve. Or the Federal Reserve created this index in 1973 and decided these weightings that you can see on the screen here from a trade perspective. They were looking for the most balanced, free-floating currency basket based on their trade partners at the time, and those weightings haven't changed since 1973. And here on the left, you can see UUP is one of the ETFs that tracks this, so more of a tradable asset that you can get this exposure to. But when you pull back the curtain and look at these weightings, it's pretty interesting because you have majority euro exposure, you have a fair bit of yen exposure, a little bit of British pound, but then you've got the Swedish krona in there. Do you have any color on why that was added? Because Swiss franc, not as big a mover, but more relevant in the Forex space.
Right. Well, this basket this basket has 6 currencies now. It used to have 11. Before the euro, there was French franc, the Deutschmark,
Gotcha.
Italian lira. Again, krona is still, the Swedish krona is still an independent currency.
Gotcha.
So that was always part of the tradable basket. And also, so that was left in there.
Okay.
And that's why, as part of it's trade weighted. And again, this measures the amount of trade that each of the countries does. That's the way the dollar, there's lots of different dollar indexes, but the DXY is traditionally a trade weighted dollar index versus a transaction weighted or whatever way you want to weight the index. So that's where that came from.
Cool. Well, I thought it would be an interesting exercise taking a look at this one and knowing our background with the individual spot Forex markets. The backdrop of this exercise would be that dollar baskets are something you can create on your own with spot Forex markets in just kind of a way of thinking that you can size your trades as small or as large as possible. So just wanted to get the gears turning as if we were to update this dollar basket. If we were to stick with trade partners, that would give us in 2025 a much different picture. Here on the left, we have a nice little graphic that is weighted by imports, U.S. imports. U.S. running a trade deficit. I thought imports better to look at than exports, perhaps. You get a much different picture here. And then on the right, added some hypothetical weightings to this. So we see our largest partner by imports is Mexico at 16%. Canada 13%. That gives you a lot of North American exposure
Right.
that you didn't have before. China 14%. If you don't see that on the right, I thought when you group this this import by continent, you get around 41% exposure to Asia. And so here I've just walked through a little bit of cutting it up, and you could cut it up in a much different way. But if you take that 41%, you could hypothetically take 21% Japanese yen, 20% Australian dollar, if you think that would be a proxy to China exposure, just because of we know how liquidity takes shape in the Forex markets, not so much in the Chinese yuan.
Right.
But then euro dropping all the way down to 20%.
And is one basket better than the other? Absolutely not. It's just what you want to get out of them. But the idea of trading a series of pairs is something we talk about at Tasty, trading small, trading offer, not having everything just in one space. Is it more, do I have to be a more sophisticated trader to do this? No, you don't. You have to determine, and again, do you need all 9 components? No, you can build your own basket. What your basket does is take some of the single currency specific risk off the table. So if something happens in Japan, or if a trade thing happens in Canada, being long the dollar against Canada, yen, Aussie, and euro as just a starting point is a way to mitigate that one off, but still have a collective dollar exposure. Different type.
Right.
But it is not any more confusing or difficult than just saying, I just want to trade euro. There you're going to take all that comes with that specific exposure. So the idea of understanding and that your premise isn't, well, UUP, they do a trade weighted one that is kind of, many people argue isn't really a relevant weighting of index anymore.
Right.
So when you go out and look at dollar indexes, and there's tons of them out there. I mean, Bloomberg has one, Refinitiv has one, everybody has one. You can look at this. There's frontier dollar indexes that have things like the real and Argentinian peso and everything. Lots of different ways to look at it. So this is really a great walkthrough.
Yeah, and I put together a couple more options. We have reserve currencies circulating throughout the world. And if you look at this pie chart, U.S. dollars, obviously a large component of that. So if you take that component away, what are you left with? You're left with majority euro. And so that kind of goes back to the traditional dollar index. Is it that far off? If you take currency reserves as your benchmark, then you are going to get a lot of euro exposure. You're going to get similar yen exposure, a little more pound exposure, and then sprinkling down into Canadian dollar, Australian dollar, and Chinese yuan. Is this, do you think, a metric? Anyone, the kind of overall flow of currencies?
It's another way to look at it, and I think it's a great way of, again, the concept of, do I have to do all 6? No. But the goal is that you're creating a diversified set of outcomes in highly correlated assets.
Right.
That is, you could argue that's next level or next iteration of kind of your trading style, but it's just putting together a different, and honestly, then not to divulge too much behind the curtain, this is something we've looked at from the product side too. Wouldn't it be great to give people the ability, hey, we'll assemble these for you and you can get at them. And it's a little bit of a work in progress, but an interesting dynamic to see, because the idea of, it's just like, the analogy is, I love Amazon. And if you had bought it, you're doing great. But the idea of diversifying that exposure across several, even if you want to stay in that world, several different things, gives you a better long-term probability of success. Same thing here.
Yeah, and here, you can get kind of that global exposure with just 4 to 6 different currency pairs. Last one, nominal GDP, taking the world leaders. And I know I said earlier, we broke up that China component into yen and Australian dollar. Taking a look at this one, is 40% Chinese yuan crazy? We typically don't look at it as much because there is, some liquidity issues. Some kind of People's Bank of China has a lot more say over the flow of currency. So this is the offshore yuan, but still subject to that kind of dynamic. But here you're really, if you go GDP, you're getting China euro split with a little sprinkle of anything else. So what do you think about that?
I think that's a really interesting way to look at it. And you highlighted the challenges. The Chinese yuan, the offshore trading is banded by the government.
Mm-hmm.
Now, that band moves. And to an extent, that band moves because they can't necessarily always control where it is.
Right.
And they can also use it as a carrot and a stick. And you've seen some of that. The yuan has weakened significantly recently against the dollar because it's like, yeah, go ahead, put tariffs on us. We'll just mark down, put a 10% tariff and we'll mark down everything by 10% with our currency, and we're off to the races. I think all of these are interesting places to start about, okay, I'm fascinated by this currency thing because it is diversified. I'm looking for exposure. I'm looking for opportunity that gets away from my core equities portfolio. FX definitely does that. I want to get next level diversification, looking at a basket, and you're right. You don't have to pick all six. Very honestly, if you wanted to look at yuan, euro, yen, you're good to go to start with. Now, as you know, putting the pound Canada mix is pretty straightforward on tastyfx. So it's not difficult to do, and you can track it every day. I think these are great ways to start to look at the power of what currency trade can give you. And it's just not this single occurrence of one currency against another. We can look at basket performance. The way, you look at professional traders trading equities, they're trading baskets of equities against each other. It is not necessarily more complex, but it's certainly adding another level of diversification, another level of opportunity, and another way to look at how do I want to express my opinion. If you go up to the second one there, Glenn, slide 3, for me, this is, whether you go by imports or anything else, what this gives me is the ability to take some of the noise out of any single currency and get a smoother set of exposures to the FX market. So they're all, you can start with what you know, what you understand. With a single pair, it's great because you could size it any way you want.
Right.
What's great here is trying to build this with futures is next to impossible.
Yeah.
You're going to have a huge position because you can't break them down this way as easy. In spot FX, you could size this down to a tiny trade. So you could build your basket with $1,000.
There you go.
Probably do it with 500. So this is a great way to start to look at next level returns and better ways to engage with the FX market. So fantastic work out of you.
There you have it, constructing your own dollar basket. Thanks for joining us. And next up, we have Tom, Tony, and Vanetta. Stay tuned.
Awesome.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it.
Pretty good.
Baseball field.
Baseball game.
It was